One of the biggest myths in buying a home is that if you are self-employed, getting a mortgage can be a challenge. Well, I'm going to debunk that myth today, but before I do that, I'm going to take you on a little home tour of 1230 Brackish Court in beautiful Beaufort, South Carolina. And this is a home that was built in 2023 by Pulte. This is a custom home. So if you look over here, we have our dining room. There's a ton of post-closing upgrades that the owner has made. You can see these beautiful green walls. And then you come over here and you'll be able to see a little walkthrough here, kind of a little wine fridge, wine storage, out of the general viewing of your guests. So very, very nice. And then you walk through here, very, very spacious, open floor plan, beautiful gas appliances. We have LVP flooring. And if you get to look over here, this is a highlight, folks. You have a gas fireplace in this open floor plan. It just flows very nicely, and as you could probably see, a lot of upgrades throughout this property. So this is anything but your builder grade. This is absolutely custom. So continue with me. We're just going to continue looking outside here. We have a nice little screened in porch. Did I mention this is the biggest lot in Salem Bay? The biggest lot, just over half an acre. The owners have done, again, as I continue on, they have done so much more than just live in this property. Talk about upgrades. It is a cloudy day out here, but if you look off in the distance, we do have a Blackstone and another smoker as well. So post-purchase upgrades, if you will, far from builder grade in 2023, with a beautiful backyard, just over half an acre. This is custom to the max. I can't say enough about the fireplace. I don't know about you, but on a cloudy day like this, I would absolutely love to just cozy up on my couch, watch a movie, maybe read a book, you name it. There's a lot of things that you can do in this house and make it your own. The current owners have given you a great start in terms of how it feels so warm and cozy. Walking in over here, this is the one, I can't technically call it a bedroom because it doesn't have a closet, but this would be your guest, quote unquote, bedroom. One of the things that I noticed here was the wallpaper is done very professionally. I actually noticed that the wallpaper was done over the outlet cover. So again, no expenses is spared in this property, as you can see. So continuing on, again, not considered a bedroom because there is no bath, there is no closet, but it does have this beautiful half bath off of it. Again, beautiful wallpaper, no expenses spared. Making my way up the stairs, this is a huge open floor space. Imagine whether you're entertaining your children or others, this is a whole nother living space. And believe it or not, the dog, as much as you might like the dog does not come with the property. But as you can see, Molly is getting very comfortable here. Probably doesn't want to leave the house because it's so cozy, but nevertheless, mom and dad have decided that maybe onto something a little bit different. And we're gonna slide over here. We have a bedroom. So understand all of the technical bedrooms are upstairs. Again, this is a 4-bedroom home, kind of that 5th bedroom that I can't call a bedroom downstairs would be considered 5, but this is a bedroom here. Their own closet, they have their own full bath. So that is definitely something worth noting here. Full bath off of this bedroom with their own closet. Again, as you can tell, Molly doesn't want to leave, and probably neither would you once you got here. You slide over here, we have another full bedroom here. Again, its own closet. This does not have its own bedroom. This will ultimately have a shared bathroom, but as you can see, very nice bedroom and closet there. And you can see throughout the fixtures in this property are absolutely, they're just unique. They're custom. As you can tell, this home is very, very well cared for by its owners. Yes, built in 2023, just a couple years old, but it feels, quite honestly, it feels better than new just because of how well it's been taken care of. Right here behind me, we have the entire, this would be a shared bathroom. It's got its own shower, dual sink vanity there. I actually love the flooring. It's a little bit, it's just shiny. It shines off a little bit for me. Again, squeaky clean. The owners here have done a very, very nice job. This would be the adjoining bedroom that is going to share that bathroom that we just took a peek at. Check it out. Bunk beds. I personally have twins, so bunk beds would be amazing for me. And then they have their own closet here. And check this out. This is a little feature that I have over here. Again, when you're looking at properties, you always want something a little unique. So check out this little, we'll call it a Harry Potter closet in here with all the toys and the Hot Wheels. So just some of the little nuances that you're not going to get in every single home. So talk about something that builds character. I think that does right there. Then we of course have the laundry room, centrally located with all the bedrooms because all the bedrooms are upstairs. And we work our way into the primary suite. Beautiful view out of the backyard. Again, did I mention it's a half-acre lot? Just over a half-acre. Biggest lot in Salem Bay. Beautiful neighborhood, beautiful community here in Beaufort, South Carolina. Again, overcast day today, but the weather here is beautiful. Actually overlooks the marsh. And this house, my friends, it is listed at $949,000. And just walking through, we got our primary bathroom, dual shower heads, dual vanity, walk-in closet, another closet just behind this door over here. No stone unturned in this home. I mean, absolutely beautiful. If you really like something like this, feel free to reach out. Again, I'm not a real estate agent. I'm the mortgage lender. I can help you with the financing if you're self-employed. That's what we're going to talk about today. Whether you're self-employed or not, I of course can assist you. But later in the video, I'm going to walk you through some of the pitfalls that I see with self-employed borrowers. And of course, early intervention. There's never too early to start. My name's Aaron Benton. I get calls, emails, texts every day from people just like you. So stick around because we're about to talk about those self-employed borrowers and different nuances there. But thanks for joining me here at 1230 Brackish Court. Thanks for sticking around. I hope you really enjoyed looking at that property in Beaufort. And right now I'm going to talk to you about self-employed income. So many times people will come to me and they kind of have this uneasy feeling. I'm self-employed, getting a loan can be a challenge. Well, I want to go through the different kind of avenues about self-employed and kind of debunk that myth that being self-employed means that getting financing is impossible. So you have a conventional loan, FHA loan, VA loan, or jumbo loans, and so a variety of different kind of loans. Conventional financing has some leeway. Really what I start out with is the rule of two. So preferably if you're in the same line of work and your business has been in existence for at least 2 years, then you like to look at a 2-year average of income. And you do that by utilizing tax returns. So conventional financing, FHA, VA, USDA, state housing programs, anything utilizing kind of mainstream financing will use your tax returns as a way to calculate income. And the most stable approach is a 2-year average. Well, Fannie Mae and Freddie Mac conventional financing, they have a little bit of a caveat. If your business has been in existence for 5 or more years, then you can use the most recent tax return. So of course the stability and the history of your business proves that, hey, I only really need to look at the most recent year to establish how that business performs. Again, doesn't for an FHA loan, VA loan, USDA loan, even if your business has been in existence for 20 years, you'd still need to do a 2-year average. So conventional financing has a little bit of flexibility. Now, there's also some additional flexibility when it comes to conventional financing. Let's hypothetically say that your business, you were in the same line of work. So let's say that you were a general manager of a landscaping company and you had been doing that for 2-3 years, and suddenly you decided, you know what, instead of being the manager of this landscaping company, you're going to move on and you're going to start your own landscaping business. Again, same line of work, same field. Clearly you understand what it takes to kind of operate a landscaping business because you were the general manager. In those situations, conventional financing has leeway and would allow me to, if the business has only been in existence for a year, I can use the most recent tax return yet again. Let's hypothetically say the business has been in existence for 16 months, so I have 1-year tax return that's only encompassing 4 months, and then I have a solid 12-month history in the most recent year. I would then do a 16-month average, or basically the amount of time that the business has been in existence. So you can tell with conventional financing, you have a lot of leeway and flexibility. So if you were to talk to somebody and they said, I can't help you because you've only been self-employed for a year, I think you need to ask further questions. You could, of course, reach out to me. If you like that answer, just right below self-employed, and we'll make sure to reach out so that we can understand your scenario. Now, there's one scenario that's even better than this, and it is they're considered non-qualified mortgages, short for non-QM. And really all that term means is that they do not follow the conventional guidelines to a T all the time. So there's some leeway. And now there is, check out this guideline. If your business has been in existence for 2 years, you only need to provide the most recent one. So conventional, you gotta be in business for 5 years to show the most recent. In this non-QM space, non-qualified mortgage, then if you're in business for 2 or more years, you could show 1 year. Where does this help? Let's play this out through an example, a real life example that I have worked through. I had somebody who, they had their business, it had only been in existence for 2 years. Well, if you're a self-employed or business owner, you recognize that that first year, you're gonna have upfront expenses that are really probably one-time expenses. You gotta grow the business, get it off the ground. And suddenly you look at that tax return and you didn't really gross, or net, I should say, a whole lot of money, because a lot of your profits, they went into the business. There was a lot of startup costs. Well, having to do a 24-month average with the first year kind of being at minimal income, potentially even a loss, that is detrimental to your ability to be able to qualify. But now fast forward, now you're in year 2 or year 3 and you filed your second year of tax returns, and that most recent year, that second year of returns, shows significant growth. Why? Well, the business is established, it's up and it's running, and you've already conquered all of those upfront costs that's what it takes to establish a business. So now I get to use the most recent year of tax returns and you qualify for the loan. Now, that story right there might speak to you. Hey, I of course had a business, and that first year was pretty challenging because I had a lot of expenses that I only had to incur one time to get me off the ground. So this 1 year most recent tax return would be very helpful. So again, if someone tells you, hey, you gotta be in business for 2 years and I need 2 years worth of tax returns, hit the pause button, give me a call. Other options. Let's say, hypothetically, your tax returns are not really indicative of what you earn. Well, there is programs out there. There is a bank statement loan. So instead of looking at the tax returns as a form of income, we look at bank statements. And we look at the most recent 12 months. So you can't commingle accounts. So what would happen is I'm either gonna have most recent 12 months of business bank statements, and I'm gonna analyze what's coming in, or I'm gonna analyze, maybe it's a personal bank account because you don't have a formal LLC bank account to correspond with your business, and I'm gonna look at the 12 most recent months of that. Now you can't commingle funds. So I have had it in the past where someone, their business, it was an Instagram influencer. And what happened was her business was, in the beginning of the year, she was kind of just doing normal business. And then by July, her business had flourished and it had absolutely taken off. And she kind of said, I really need to get this business formalized, have its own bank account. And I had to tell that person that they had to wait until she had 12 months of full business bank accounts, because I couldn't use the 6 months in her personal name and then the 6 months in her business. You can imagine with the personal account, she had groceries and different things that were really not business expenses flowing through it. So you can't commingle, but a bank statement loan is a really awesome product when your tax returns might not allow you to qualify, but you are showing tremendous amount of income flowing into your bank statements. So very powerful tool, the bank statement loan. Also, another piece to analyze when you're utilizing a bank statement loan is the expense ratio. So typically what that means is whatever you bring in, so if I brought in $100,000 in a given year, default mortgage guidelines would be $50,000, half of that, 50%. Well, bank statement loans have some common sense attached to them, and they say if, for instance, you are self-employed, you run your own business, you are the only employee, you don't actually have anyone underneath you, the expense ratio could be as little as 15%. That would mean that if $100,000 was coming in, I'd only have to suggest that $15,000 in expenses would be coming out. Therefore, your income on an annual basis, in this case, $100,000 less $15,000, $85,000. So bank statement loan, very, very powerful tool. This is nothing more than a video that talks about conventional financing being 1 year. There's some caveats there. VA, FHA, USDA, they're going to require 2 years regardless. Then I just talked to you about a bank statement loan. Last story I want to tell you. I was working with a mechanic, and understand, about 30% of my business is rescue deals. And what that means is I'm not the first lender. They've spoken with someone else, they've gotten negative news, and they've been told, hey, I can't actually write that loan. Well, this mechanic came to me and said, I only have 16 months worth of income. I got 4 months on my most recent, or my last tax return, then of course I have my most recent 12 months. My business has been in existence for 16 months. The previous lender said, I need to do a 2-year average. I need to take a 24-month average of that. Some lenders will even say, well, again, you're not even in business for 2 years. I can't use any of that income. However, I was able to utilize a 16-month average. The mechanic who opened his own shop, prior to opening his own shop, he was a mechanic at another garage, and I was able to get a Secretary of State showing that his business had been started in September. So I had September, October, November, December, 4 months worth of income in the first year of tax returns, then the most recent 12 months, and I did a 16-month calculation. Again, this was a conventional loan. VA, FHA, USDA would say something slightly different. Nevertheless, that individual went from pretty much a frown, unable to purchase, to I was handing them the keys about a month later. So understand, self-employed income does not mean that you can't get a loan. Yes, you might have to jump through a couple hoops. Yes, you might have to provide profit and loss statements here and there, depending on your loan product. Yes, depending on who you talk to, you're gonna get asked a variety of questions. But I live here in Hilton Head, South Carolina, and for whatever reason, we have a lot of individuals here who are self-employed. So whether you have a Schedule C, an 1120S, an 1120, just a sheer corporation, or a partnership, I would love to assist you. My name is Aaron Benton. I'm a local mortgage lender. I'm host of this channel. I get calls, emails, texts every day from people just like you because they're looking for home financing advice, and maybe they've heard some news that they don't want to really hear because they're self-employed. Well, my number is 843-505-5623. Subscribe to my channel. I hope one day to get to meet you, but if not, I hope to at least see you on the next video.